So hey guys, welcome back to another video. So in today's video we are going to talk about that how to identify the structure in the market. So without wasting time, let's get started. How are you feeling? Is it the same? So welcome back to my channel. So today we are going to discuss that what are the structures in the market. So there are three types of structures in the market. So one is a normal structure which everybody knows, like everybody who is trading for like last 6 months or 1 year, he might be knowing that what is higher highs and higher lows. It's a normal structure like this. Okay, it will create a higher high, higher low, higher high, higher low, like this. We'll keep on doing the same thing. Okay, and whenever price will break this, it will be called like a break of structure, and this will be also called a break of structure. Okay, so with a break of structure, the higher highs and higher lows will be formed. So this is a normal structure in the market, the first one. And how we can take trade in this type of market, when market is doing this thing, it's very simple, that you can take entry from optimal trade entry like this. Okay, or you can take entry from a fair value gap, which will be right over here at 705 level, which is not a fair value gap, it's just a normal imbalance. But if price is making higher highs and higher lows, it will work. Okay, or what you can do is you can make money, or you can take trade from, and at this point of scenario your supply and demand will also work. Okay, and this what can also work in this. Or you can take trades from our order block, which is right over here, because we never know, like, but it will be not order block, it will be a demand zone. But if it's a order block like this, okay, price has gone below of this structure, so it is a liquidity grab. So this candle which will be right over here will be our order block. So this, it is a normal structure, and it is very easy for people to find out, and people can make a lots of money with this structure. Okay, they can identify this higher highs and higher lows, and they can identify easily the breakout structure, and it will be really good enough for them. And now what they can do is that, for example, think like this is a 1h time frame. Okay, and now if this is a 1h time frame, then on a smaller time frame, like on 5 minute, what the price will do, price will create like something like this: higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and then a higher high, and then all of the sudden change in character, like market structure shift, and then it will keep on making lower high, lower low, lower high, lower low, lower high, lower low, and then all of a sudden there will be another market structure shift, then it will make a higher high, higher low, higher high, and this what will keep on going like this. Okay, so what you have to, so what do I want to say with this, like, so the thing which I want to say is that in higher time frame, if you can see that price is creating a normal higher highs and higher lows, and if you trade on a smaller time frame, or you want to take a trade in a smaller time frame, then you should look for that where is the price, that price has created the higher low or not. Okay, so because if you take a buy right over here, somewhere on over here on a breakout, okay, this what can happen with you, and it can keep on falling. Or you can take a small scalp from here and you can take a sell. Okay, and from here, whenever you see a market structure, another market structure shift, and you can see that price has given a rejection from around this 705 level of optimal trade entry, you can take another buy from here. So the same thing, like the way we were looking for the fair value gap over here to take a buy, you can do the same thing, like you can do the same thing over here. When you will see that there is a break of structure, there is a market structure shift over here, then you can find out any small fair value gap like this, and you can take a buy from here. Okay, the same thing. But all of this thing which I taught you is like rubbish. Okay, like, because this works but it doesn't works, and I told you for sake of formality, like, because this is a basic thing. Okay, and markets are very rare when markets are like this. Okay, when markets are really trending, then the market can be like this. Okay, so for example, Nasdaq is running up and Feds are cutting down the interest rate, so then this thing can happen. But this happens only 20% or 30% of the time in the market. Okay, but there is another structure which keeps on happening, and like that's the 80%, and that happens every time. Okay, and now we go on our second structure, which is like this. So it starts with like this: higher high, higher low, higher high, higher low, higher high. All of the sudden, change of character, right? It's a change of character. So it's like a lower low, and then it will create another higher high, higher low, higher high, higher low, higher high. All of the sudden, lower low, higher high, and then it will give another lower low, and then it will go make another higher high, and then it will go down. It will do this. So now this is a structure which you will see in the market. So if you look closely, price was creating a higher highs, higher lows, higher highs, higher lows, and then all of the sudden there was this market structure shift. Okay, but what happens after that? Market gives another market structure shift over above here. Okay, and then it kept on happening, and then you can see that there is another you can see that there is another market structure shift over here. Okay, like people will think that price will start to fall, but what happens after that? Price goes up and takes this high. Okay, and then what happens after that? Market goes down one more time and takes this low over here, and then people will think like this is now a bearish market structure shift. So now price will fall after rejecting from this fair value gap, which will be over here, or any order block or anything which they think of, like anything. But what will happen? Price will go up and take this high, and it will show that price is about to go up. Okay, and now what happens after that? Price falls down, takes this low, and then it creates a lower high, lower low, and then all of the sudden it will create a higher high, and then it will create a higher low, and then it will create another this low, it will create a lower low, and it will create a lower high, and then it will create another lower low, and then there is another lower high over here. So now I will mark these things, like why this thing happens every time, like, and this happens on your charts, I can say, because people take losses over here only. Okay, like they will think that price should not go below of the previous lower low or higher low, but price goes, and then they think that it is a market structure shift, and then they take the opposite trade, and then they take another loss. So for example, if somebody is seeing that price is making really good higher high, so he will look for entry from, if he's supply and demand trader, he will look for entry from this demand zone, right? He will look for the entry from this demand zone. Or if somebody is a trader who has a half knowledge about smart money concepts, he will find out one small imbalance, and he will call it a fair value gap over here, and he will take entry from here. His stop loss will also get hit. And a person who trades a break and retest, his stop loss will also get hit. So when his stop loss will get hit over here, then what they will start to do, they will think like it's a market structure shift, and market will start to fall from here. Okay, so they will take a trade from this break and retest. If they cannot get a trade from here for a sell, they will take a sell from this fair value gap, which will be over here in the charts, and then they will try to take another sell from this supply zone. Okay, but what happens after that? It goes and takes all the stop losses, and then it starts to make its own thing. And now they trusted one more time that price is creating higher highs and higher lows. This is a higher low, higher high, higher low, and another higher high. They will start for looking for buys over here, and then one more time this will happen with them, and then they will look for sell, and this what will happen with them. So these orange spots are the stop losses of new traders, those who learn that normal higher high and higher low pattern. Okay, so this is the thing. This is what happens really all the time on the charts. This is the structure, and this structure you should learn. Okay, because if you know about this structure, then only you can easily trade. Because why this happens in the market? Because price want to take liquidity, and liquidity is a stop loss. So people, those who are buying on this price leg right over here, okay, all of their stop losses will be of below of this higher low, right? So that's why price will go down and take all of their stop losses, and then it will keep on going up with the order flow. Okay, so this is what I try to explain. So this is the structure which you can use. Okay, and another one is the consolidation. And what do I mean by the consolidation? Okay, the consolidation will be like this, that price will consolidate. It's doing this, all of a sudden it gives a breakout and then it goes towards the downside. Okay, and then it gives another breakout, then it goes into that, then it will give another breakout, then it will give another breakout towards the downside, and then it will start to consolidate, and then it will start to consolidate it small, and then it will give another breakout, and then it will come down, another breakout, come inside. So now if you look over here, this structure over here, and you can see that there is this fake breakouts. Okay, and now this happens most of the time. People will take buy when they will see that price has left this structure. Yeah, over here people will see that price is giving a breakout from here, so they will take a buy from this breakout. Okay, and people will take the sell from this breakout. But what happens, it gives a false breakout and then it goes inside to that consolidation, right? So the thing which I'm trying to say in this both of this structure, that what if I tell you that you should take trades at this orange spots. Okay, if you don't look in this type of lens of higher highs and higher lows, you can look for your entry. Okay, you can look for your entry on this orange dots. Like you are taking a sell in this orange dot, you are taking buy over here, you're taking sell over here, you're taking sell over here, sell over here. And in consolidation also, you are taking a sell over here, a buy over here, a sell over here. So what this will enable, this will help you to make money in consolidating market also, and in a trending market also. Okay, so that's why these two structures are important. Another, the normal structure, which is like normally the higher high and higher low. As I told you, that this works only 10% of the time, and market will be not this clear, right? It will be not that much clear, like you can easily buy this lower lows and you can make money, and you can easily buy these lower lows and you can make money. No, it does not happen. Okay, it will happen in a 1 in a 10. Like if you take 10 trades, then you will get one trade like this. Okay, so that's why this is not good for your risk management. But if you focus on this, and the thing is, which I'm trying to say, that the price is fractal. Okay, so if you can do this analysis, so suppose, okay, this is a 4H or 1H time frame, price has gone up. Okay, and now it is falling down from here. Now you can see on 4H time frame, price has taken this high. So now on 5-minute time frame, okay, you can on 5-minute time frame you can go, and now on 5-minute time frame, so for example we zoom into this, okay, over here. So in this much area, if you go into 5-minute time frame, then you know what you can see in this area. You can see the same thing which is happening over here. Like this type of change of character will be happening in that. Why? Because price is fractal. So whenever the market will move, it will give a market structure shift, and then it will go up and take out and make another false move for people to think, because this was a normal market structure shift, right? And no, sorry, this one was the proper market structure shift, but they made a fool once, then gave another market structure shift, they make fools once again, and then they decided to go all down, and then it keeps on going down and down. So people call it turtle soup, okay, like this, or like liquidity grab, and they are right. Like you can call it anything, but if your concepts are clear, you can name it like anything. You can name it anything which you want, like your pet name or anything. But the thing is, your concepts should be cleared. Okay, so price is fractal, so don't think about it like where I should look for this structure. like the structure which I'm explaining to you over here. You can look it on 1 minute time frame, you can look it on 15-second time frame, you can look it on daily time frame. Okay, I hope you understood this one. So this structure, so from now you know that market moves like this. So don't try to buy on this. If market is going up, don't try to buy over here on higher low. So when market is in an uptrend, try to buy in the market in lower low. Like this was the lower low, right? And this also was the lower low. So try to when market is going up, try to buy in a lower low. Okay, not on this normal like higher low. Try to buy it in a lower low. And same thing for the bearish scenario. So when market is going down like this, try to sell when market will make a higher high, and then do this. And in consolidation thing, what you can do is, whenever you can, consolidation is like a very good, you can make a lots of money from consolidation. Just wait for just place your limits, man. Like just place your limits like this, like alert, and then just forget about it. And then when price will go and give a fake breakout, just place your sell limit right over there and take the trades. Or for example, if you're looking at this consolidation in 4H time frame, then when you can see that price has given a fake breakout, you can go on 5-minute time frame, and then you can look for any market structure shift after liquidity taken, and then you can take the trade. But you know what wrong will happen with you when you go do multi-time frame analysis? When you do multi-time frame analysis, the wrong thing which happens is that you refine your stop loss a lot. Like you will, when from, like for example, on 1H time frame or 4H time frame, your stop loss will be really big, like a little bit big, right? Suppose your stop loss is like 15 pips from here. Okay, but if you go on smaller time frame, right, if you go on smaller time frame, so for example your stop loss is like 25 pips, okay, over here. But if you go on a smaller time frame, you know what you will do? You will think like, I am giving this so much stop loss house, like stop loss space over here, like 25 pips, I should reduce it. And you will reduce it, and you will try to refine your stop loss, and you know what will happen? You will end up taking like a 10 pip stop loss or 5 pip, and you are correct about the market move, but what will happen? Price will go and take your stop loss first, and then it will fall down. Okay, so I hope you can understand this. So I should say that you should follow only these two structures in the market. Okay, don't fall for that higher highs and higher lows. That's not a fairy tale. Like it's not a fairy tale, bro. Like if everybody knows that what's a higher high and higher low. A 5-year-old can also spot out that it's making a higher high, higher low, higher high, higher low. It does not work in that way. It's really too much complicated, and you have to look it in a way like the way the institutionals see. They don't give any care. They don't care about like what you are doing in the charts. They only care about liquidity. And if you can assume liquidity, that where the liquidity can be, for liquidity means stop loss, where it can be, then you can make a lots of profit from it. Okay, so I hope you understood these two structures. Okay, and you should follow these two structures only. And now let's go on this over here. Okay, so now look it over here. This is an example. So market was making a really good move. It was bearish. It was a higher high or what? It was a higher high. Then it gave a market structure shift. Then it made a lower high, lower low, lower high, lower low, and then all of a sudden it gave a higher high. Good. Okay, or you can, if you take a sell over here, okay, then you can take a loss. And I should say you should not take a sell over here. Why? Because you should know what's your bias, what's your higher time frame bias going on. And I don't want to cover that part. I already made a video about that, how to know the bias, a full big video. Okay, you can see that video's link in the description. All right, so that's why I will not take a sell over here, and you should also not take a sell over here because the bias is bullish. Okay, so that's why you should look for only buy trades. So now if market give a market structure shift over here, which we were waiting for, and then market goes down, and look at the time below. Okay, it's 7:25, and you should not trade Nasdaq at 7:25. You should trade Nasdaq after 10 o'clock or after 9:45 or something, or 11 o'clock. Okay, so now what happens? Market gives a higher high, and it gives a higher low, another higher high, and all of the sudden like price fell down, it gave a market structure shift over here. Okay, like price was making that fairy tale of higher highs and higher lows, and then all of a sudden change of character, another higher highs. It was doing all of that good thing over here, but all of a sudden this happens, and now people will think that this is another market structure shift, so I should look for sales. Like this, what will normal person will think, right? And what I told you in that structure thing, that you should take if market is going up, okay, if market is making higher highs and higher lows, then you should take a buy on a lower low. So it's a lower low right over here. You should place your buy limit right over here, and you should place your stop loss somewhere around over here, and you should target for this and see what happens after that. Price goes up and takes this high, and then it kept on making this higher high and higher low thing. Okay, now if I do it like this, like you can see that what I was saying, that it was creating this lower high, lower low, lower high, lower low, all of a sudden higher high, higher low, higher high, higher low. Everything is going good over here. Okay, and then it creates another higher high. Okay, it creates another higher high. So what people will do in this price leg, they will see that this is a fair value gap right over here sitting, so they will take a buy over here, or they can take a buy from this 3 candles, and they can say that this is a order block or demand zone, whatever, because they have mixed up the order block and supply and demand. So that's why they can say that this is a order block or supply demand. Okay, or they can say like this candle is a supply demand. But what happens after that? Market falls down, takes all of their stop losses. Instead of doing that, the thing which I told you, that you should take the entry on this orange spot over here. Okay, so this is the orange spot over here. Okay, so how you will take an entry over here? So you can see that people will be thinking that this is a higher low, right? So price should not go below of this or below of this one. Okay, so what you will do, you will just place your buy limits little bit below of this structure, like over here, and your stop loss can be like 20-30 points, and now you will target this higher high. Okay, this will be your target, and you can easily get that profit from here by entering on this. Don't try to enter over here, take entry from this. No, just wait for this orange spot to happen. Okay, when this will happen, now you can understand the structure. Okay, you can know that the price is taking the liquidity, and you can understand the structure which I taught is working over here. You can take the trade. Okay, so wait for that orange spot to happen. All right, so over here also, like look at over here, the price is over here, the price is doing a good thing. Okay, it was creating a higher high, higher low, higher high, another higher low, another higher high, all of a sudden lower low. You could have taken a buy over here, all right, but it was consolidating, and you would have ended up in a break-even trade. Okay, or you could have ended up in a loss also if you would have taken a buy from here, little bit below, like this. It would have been a stop loss. Okay, so this can happen. The stop loss can also happen, this I can say. So that's why risk management is really important. All right, so now this how you have to frame your trades. Like look at over here, price was creating a really good trend line over here. Okay, it gave a trend line break. So now what people will be doing over here, they will be selling, right? So for example, it was making a higher highs, higher lows, higher high, higher low, higher high, and all of a sudden lower low. You can take a buy over here. Okay, or you can go on a smaller time frame, look for a confirmation of a fair value gap entry, and you can take a buy over here. Or you can wait for afternoon session. And what happens in the afternoon session? Price was creating a high, this lower low, lower high, and another lower low. Okay, in this lower low, you can take a buy over here, because price can go up and take this high over here. Okay, as I said, it can do this. All right, but market ends, so it was not done at that moment. So now this was the news going on. Went down and took this stop losses below this. Okay, I should show you more examples, and this how it is. So see, like in this type of thing, how you can find out higher highs and higher lows. Like it's really impossible, right? Like to find out the higher highs and higher lows. So, and this what happens over here. Price was creating a higher high. From here it creates a higher high, higher low. Oh sorry, lower high, lower low, and all of a sudden like there is another higher high over here. So what people will do when they will see this type of higher high, they will try to take a buy from here, right? So, and people will take a buy from this breakout, right? But instead of price going up, it went down, right? Went down. And now if you can see that it gave a rejection from this what demand zone, so it made a fool of people that it's going up from here. But what happens overall? It goes down. So what I told you, if market is in a bearish move, okay, if it is going down, then you should look for higher high. If price is making lower high, lower low, then you should enter on a higher high. So this was the higher high over here, and you can see that what good entry you would have got if you would have taken a sell over here. So this what I'm trying to explain, okay? And I don't think so that we have a consolidation part over here also. Yeah, look it over here also, okay? So now price was creating this higher high, all of a sudden price fell down, and look at the time below, it created a lower high, lower low, and then what it did, it created a higher high, right? And now people will think that price will go up from this fair value gap or from this order block or from this breakoff block or whatever they say. But what happens after that? Price goes down and falls. And if you look at it like this will be our orange spot which I taught you right now, okay? Just wait for this to happen in the charts, and if you keep on do it, and if you do it in a series of trades, and you keep on taking a lots of trades, like in a series, like 10 trades or 20 trades like this, then you can make a lots of profit from it, okay? And I hope you understood that structure. One is the normal higher highs and higher lows, which does not work. It works very rare, like price is doing price is very clean, it's making higher highs and higher lows and it's going up, okay? Like it's very hard to find. But the another one which I showed you, that price will create a lower low, lower high, lower low, and then all of a sudden it will create a higher high. This can happen 90% of the time, okay? And another one is the consolidation. Everybody knows that in consolidation there are fake breakouts, so you can take the trades on that fake breakouts. If it's a bullish breakout, take a sell over there, okay? And if it's a bearish breakout, take a buy over there. And if you want to add something more confluence, you can just add that bias. And how you will add the bias? You will do the same thing which you are doing over here. You will do the same thing on a higher time frame, okay? You will do the same thing on a higher time frame. And now look at over here, Nasdaq was at its all-time high. So what does it mean? That price is in too much of premium, right? So now when price was in too much of premium, so what the price will do, it will come into the discount zone, right? So now what price was doing, it was creating this higher high, higher low, higher high, and then another higher low, another higher high, and then all of a sudden lower low. And what I told you, that you have to take a buy on this lower low. And now people say like this is like catching the falling knife. Okay, if you are scared to do that, so then wait for a market structure shift in a smaller time frame, okay? Then wait for a market structure shift on a smaller time frame, like on 5 minute or something. Try to look for some trades on a smaller time frame from this breaker block, okay? Because if you are afraid to place your limits like little bit below of this structure, so like do this thing, the same thing which we were doing on a 5 minute time frame, do that on a higher time frame. Then you will get to know that where the higher time frame will go overall, okay? And now when you know that higher time frame is going up, 1H will go up because it has taken this two higher lows, okay? And it has taken the liquidity from here. So now your bias is bullish from here. So now you will only look for buys from here, okay? You will not look for sells. So you will only wait for price to come down and take this lower low over here, and then you will take a buy over here, and you will wait for price to go up, okay? So this what you will do. You will not take a sell from like this. If price goes up and takes this high, then you will take a sell from here. You can take it, but you have to do a scalp. You should be happy with 1:1 if you're doing that. Okay. So I hope you understood that what I tried to explain. I showed you that what's the bias and how to frame. So you have to do the same thing on higher time frame to know the short term trend. Okay. And if you're trading on 5-minute time frame, a small trend on short term trend on 1h time frame is enough for you to trade on 5-minute time frame. You don't need daily bias. Daily bias is only needed for the people those who are trading on 1h time frame or 15-minute. If you're trading on 5-minute, you should know that what's the short term trend on 1h time frame. So we got to know that the short term trend is bullish because price has created this lower low in a bullish scenario. So it has taken the liquidity from here, so market will go up and take this high. Okay, so I hope you guys understood this video and you understood these structures, and I showed you that how to frame your trades with these 3 structures, and I showed you the multi time frame, that you should know the short term trend on a high time frame, and you should use your own risk management. Okay, whatever your account capital is. So I hope you guys will like this video. So if you guys like this video, drop a like, share it with your friends, and subscribe for more content like this, and check out the links in the description if you want to, because I can only make like 30-minute videos right on YouTube and nobody will watch it. I'm saying like I'm making this video, like it will be like really less people those who will watch till the end. Okay, so that's why I cannot explain it. So if you want a full explanation, then I have a links of my, then you can join for the mentorship. Okay, if you want to. Otherwise you can just learn it from here. Okay, or if you want a really good explanation and personal assistance, then only go for, and if you're serious about it, then only go for mentorship. And if you want to go for mentorship, you can message me or DM me from on Instagram or on Discord. Okay, or what you can do is like or if you want to see my trades, like I take trades like this. Okay, so there is a group, there will be a Discord link, just join that. I just post my trades over there. Okay, and I have a private chat room over there, you can join that also if you want. Okay, otherwise just learn from here and practice. And if you have any questions, any doubts which you want to ask, just write it down in the comment section, and I will make another video on that topic to clear your doubts. Okay, so that's it for today. So I will see you in the next one. Bye.
How are you feeling? Is it the same?